I think for ICBC and BOC, the result is quite in line and well expected by the market. We see that the SOE banks, it's a very good loan balance growth. Like ICBC as at an already very large asset scale, or also see like 16.4% year-on-year loan balance growth, which offset part of its NIM drop. And I think the BOC HK saw above market expectation first half results, and the positive surprise is mainly from the loan balance growth as well as the asset quality, and it delivered a much better than market average loan balance growth at 4.8% year to date, and also better than peers NPL ratio at 0.73%.
I've got to ask you, Manyi, because you look at ICBC, for example, and their net interest income did come in below expectations. The net interest margin, again, 172. It's not necessarily the best, but it's not necessarily the worst. And I suppose when it comes to them particularly, what struck me was their CET1 ratio, because that was resoundingly strong, despite the fact that it missed estimates, but it's still stronger than some of the other banks. But I've got to ask you, considering the macro environment right now in China, considering that there could potentially be a need for further involvement by the banks to prop up potentially companies and the like. Do you worry at all, even though they're incredibly cheap right now, do you worry that there could be more pain to come for the banking system in China?
Honestly, yes. I expect that the NIM downward pressure to continue in second half of the year, and I do expect like a few bips more NIM drop in the China banking system, especially for the light banks like the SOE and joint stock banks. Because, okay, so first of all, we do see that we are continuing to have a loosening monetary policy in China with further LPR cut in recent months. And also we are expecting the rate cut on the existing mortgage, which we expect to have less than 10 bips of negative impact on China banking system. And on the deposit side, we continue to see term deposit migration. That means that investors or residentials are more willing to put their money in the long-term higher yield time deposit. And also on the foreign currency deposit side, we also see a higher rate.